And Tina, you were on with us a year ago. We had you over the phone, and we wanted to bring you in here in January. January is just such an important time. We talk about Merry Debt-Miss, and that's really, we talk about refinance, and we do so many refinances, and it's so great for people, puts them in a better position. But sometimes people can't refinance. Sometimes people are not homeowners, or they don't have the equity to refinance, or maybe there's another reason that they just can't qualify for, maybe it's credit, maybe it's income, and they need to have, another solution. And that's really what we want to talk to you today about. So give us a little rundown on what you do, what your job is, et cetera, and I'm sure we'll have a lot of questions for you as well.
Sure. My name is Tina Powell. I'm a licensed insolvency trustee with MMP Limited. I work out of the Dartmouth office, and I deal with personal insolvencies, which include bankruptcies and proposals. As well, we often offer free confidential consultations to people who need our help. And we're just a phone call or a click away.
Yeah. Tina, it's obviously a great service that you do for everybody, but I would think that it's got to be it's a challenging job, I would think, because you're seeing people let's face it, in somewhat desperate straits, right? How do you humanize the whole job and make it a good experience as best that you can and be compassionate and all that stuff, because these are attributes that I'm sure that you have, right?
Sure. I will tell you that we are dealing with people at such a critical time in their lives.
Yeah.
When people have financial stress, it impacts every area of their life. We basically treat people with respect. We want them to come into our office and not feel judged.
Sure.
And a lot of our debt counselors are very empathetic, and we just want to make people feel that they're not judged and they're just that the service is there, and we're here to help you. We want people to feel that, that there is help available, because often people feel
helpless. Probably
they feel helpless.
I see so many matrimonial breakdowns and things that happen around like debt issues, and I see so many couples too that don't even talk about their finances, or they just operate so in a silo.
Yeah. Often people will isolate themselves when they're dealing with financial crisis, and it does have a profound impact. They're scared of feeling judged, and they feel ashamed, and it's a lot of people don't even know that there is help available. So it's really important to try to get the information out there that we can help you.
Yeah. And the law, thank goodness somebody saw wisdom in creating these laws, right, that are meant to help people in these situations. So I guess empower us a bit with some of the legalities of this. What are people's options?
So when somebody comes to us, we do a pretty detailed assessment of their financial situation. And if their credit situation is not too severe, we can look at sometimes just helping them by doing just a simple budget fix, right? Reviewing their budget, which may free up some cash. Sometimes they have access to some assets which they can use to pay down debt. Or maybe they may be a candidate for a consolidation loan.
Yeah, and I've had some referrals from your office as well, for customers that a refinance makes sense and they just don't think of that even as an option.
Exactly. But for those who, are more severely indebted, we often will suggest and work with them to do either a consumer proposal or a Division I proposal, or a bankruptcy. And when I'm talking proposals, a proposal basically is a formal debt settlement.
Right.
And it's a different mechanism than a bankruptcy, but both are legislated under the Bankruptcy and Insolvency Act.
These are federal laws, are they?
Yes.
Yes.
So both basically they provide a stay of proceedings, which is a stopping of collection action and legal action from the creditors. Both are a mechanism or a means to pay down a portion of your debt and to discharge your debt. And both offer financial counseling sessions, which can get you on the road to make better financial decisions going forward.
Wow. Do you find that that people often have a real sense of relief? I'm sure that you can see that after a session with them, and you should empathetically explain what's available to them. You might probably see a weight lifted off them, eh?
I've had people tell me that they haven't slept in years. And even before we actually sign the formal documents, they're already starting to see that there is a light at the end of the tunnel.
Sure. Yeah, amazing. Amazing. Assets, what can people hold on to in bankruptcy?
Sure. So assets are legislated. There's some assets which are federally exempt and some assets which are provincially exempt. So in Nova Scotia, it's household furniture, personal effects, life insurance policies with preferred beneficiaries. Those life insurance policies, like a whole life policy that would have a cash surrender value. RRSPs are exempt except for any contributions in the 12 months prior.
Okay.
Tools of trade. So if you're self-employed, you can have tools of trade up to $7,500. And a vehicle, if it's not secured, if you own it outright, up to $6,500. So there are some assets that people can hang on to for sure.
What about a home? Like, can someone keep their home if they have a mortgage and go through a bankruptcy?
Absolutely. A bankruptcy or a proposal, you have the option to continue to pay that mortgage. And as long as you're not in default of the mortgage when you file a formal proceeding. And also we basically encourage people to, try to work with the lender so that the transition is as smooth as possible. So yeah, people keep their homes and cars all the time. Actually,
I think that's a stigma. I think if people think that if they're going to have a bankruptcy, they basically are losing everything.
Yeah, no. And, because you can maintain your assets and maintain the security agreements separate or outside the proposal or the bankruptcy, people can file bankruptcy and nobody really would know, right? Because there's no change in, your residence,
your everyday operation,
your everyday life.
Now, with a bankruptcy, and correct me if I'm wrong, but there is a certain income level where you have to pay back a certain portion of the income as well. So I know normally in a bankruptcy, it takes about a year, I think, to be discharged. Is that right?
Well, yeah. So the superintendent of bankruptcy issues an income guideline.
Okay.
It's a federal guideline based on the number of people in your family.
Okay.
So if you're a first-time filer, so if you've never filed for bankruptcy before, if your income doesn't exceed the income guideline that's based on your family size, you can be discharged in as little as 9 months.
Oh, wow. Okay.
Yeah.
That's very quick.
If your income exceeds the income guideline, then you may be looking at a 21-month bankruptcy, which really is not a long time. It's less than 2 years. If you've had previous filings, then you're required to report your income to us for a longer period of time, and you're in the bankruptcy for a longer period of time. But it's still a viable option for many.
And I would assume multiple bankruptcies are relatively rare. I assume they're on the increase.
Well, they're not as rare as you think.
Wow.
We have a lot of multiple filers. When somebody comes and they've filed bankruptcy previously, we'll try to work with them to enable them to file a proposal to the creditors because it's so much easier on their credit rating. And overall, they feel much better when they're doing a proposal because they feel like they are paying.
Of course, because I think a double bankruptcy, that stays on the credit bureau for 14 years.
From the date of your discharge.
Wow.
So
that could be a long, long time.
That's right. So if you file a second bankruptcy and you have what's called surplus income, which is when your income exceeds the superintendent of bankruptcy income, you have to report your income for 36 months and before you're eligible for a discharge. And then that's an additional 14 years on your credit rating.
So 17 years you're in purgatory You
could be, yes.
Yeah. So and so talk to me about a proposal, because I know that falls off the credit bureau a lot quicker than bankruptcy, even if that's your first one. So that sounds like a positive way for a lot of people to proceed if they have the income. So talk to me about what a proposal looks like.
So when somebody comes to us, as I mentioned, we do a detailed financial review of their situation and in regards to assets and income. And if they have the ability to file a proposal, many prefer that option. So sometimes when reviewing their budgets, we will go through and just freeing up the unsecured debt repayment will enable them to have sufficient cash flow to be able to file a proposal. And a proposal basically, in most cases, is you're paying back only a portion of your debt. So it is a viable option. It has proposals have gained a lot of traction in the last 5 to 10 years. People prefer a proposal.
How much leniency do lenders have on proposals when it comes to is there like 50%, 60%? What generally? And I suppose it would depend on the situation.
You're right. It does depend on the situation. We generally look at what the creditors would receive in a bankruptcy and improve the offer so that they're getting a better return.
I see. Yeah. So it's math, really.
It's just simple math.
It's in the lender's best interest, obviously.
Yes.
Yeah.
And another.
And is that usually approved? Like when you put these forward to these lenders? Because sometimes you're dealing with 10, 20 plus lenders because they all have to agree.
That's right. So when we put a proposal together, most generally they're made to the unsecured creditors. And all we're looking for is a simple majority of approval. So that's basically creditors get one vote technically for every dollar they're owed. So you could have one creditor that's owed $10,000 that could outvote 3 creditors that in total were owed $7,000, right? Okay. So, but they are very favorable. And considering, too, with a proposal, dividends are paid out regularly to the creditors. In a bankruptcy, often dividends aren't paid out till the end of the bankruptcy. So that's definitely more favorable.
Do you have relationships with these lenders?
Well, not really relationships, but what we do basically is sometimes there's a bit of a negotiation going on. So if a creditor wants to counteroffer the offer that we put forth, then, we will, negotiate and try to work out something.
So how does that work when a proposal is done and it's how long till somebody can totally rebuild their credit off a proposal?
Actually, a consumer proposal stays on your credit rating for 6 years from the day you file it. A consumer proposal term cannot exceed 5 years.
I see.
But what we generally see, and it's gaining a lot of popularity, is that people will start rebuilding their credit before they even complete the proposal, so that they're well underway and already, gaining some financial stability.
Yeah, and it's certainly better than the alternative, right?
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.